What's up, everybody? Welcome back to the High Performance Trader. Today in this lesson I want to break down a very powerful tool that I use every single day to help me understand and gauge when the market's going to reverse, right? I call it the snapback, right? So the snapback is just a very simple terminology, right? That is supposed to help you understand that when price gets extended from the moving average, you can expect price to return, right? So the moving average we're going to be using today is the 9D EMA, right? That's the 9 double exponential moving average, right? And the power of this moving average is intense. It's insane. It doesn't matter the time frame, right? And I want to give you a little context on how I started using it, right? So I used to struggle with holding on to trades, right? Holding on to winning trades was a very big struggle for me, right? Everybody goes through it. You get in a trade, you get burnt over and over. A couple years goes by, right? And then you find yourself at a point where it's extremely hard for you to hold on to a winning trade, right? You get in a trade, you're up like 20-30%, you don't want to give it back, so you just exit out, right? So that was a big issue for me, right? So one of the tools that I used to get over that feat was the 9 double exponential moving average. See, the thing about the 9 double exponential is this blue line right here is it hugs price, right? It's very tight, right? It's literally like when you're in a trend, you'll notice here, anytime you get extended, you get the snapback, right? Notice here, nice healthy trend to the downside, right? So now we find ourselves at the opportunity, right? And now to do this, to really identify the snapback, like I said, you could do it on the 5 minute, do it on the 2 minute, right? But to really gauge the market reversal, think about it. If we get extended on the 5 minute time frame, like right here, right? You see how we're super extended here on the 5 minute time frame? Or actually here, let me just do it on this chart. Super extended from price, right? We sold off down below previous day high, right? That's that blue line. We're pretty far away. I'd say let's see here, we're about, what's the range? We're about 50 cents away from the 9, right? About 60 cents away. Price snaps back into it on the next green candle, right? See, anytime you're very extended, you get some sort of pullback, right? So that's high probability. It's highly probable that if you get extended from the moving average, you get the pullback. This is on the 5 minute time frame. When does it serve us? It serves us with holding on to trades. Okay, cool. So what if we use that same concept, that same principle, the snapback, on a higher time frame? See, we're intraday day traders, right? Meaning we put on trades in between the hours of 9:30 Eastern to 4 p.m. Eastern, right? So think about it. How can we use the snapback to serve us in between those time frames? Using the 1 hour chart. Think about it. If I'm trying to gauge a healthy trend or a reversal, doesn't it make sense to use the snapback, right? So real quick, let me get rid of the EMA cloud I have here so I can kind of just make this a little easier to see, right? See this blue line, that's the 9D EMA. See how extended we are from price, right? We just got this violent sell-off, right? I'll go like this so you guys can see it. Okay, so we just got this violent sell-off here on the chart on the left, right? Price was above previous day high. You can see here we opened well above it. We had a pretty large gap. We have end of day all the way down here, and the gap has been filled, right? And now you have to ask yourself, how was the gap filled? Was it a violent move? Was it very fast? Was it unhealthy? Well, that's when we use the 9D EMA on the 1 hour. Look at how far away the current price is from the 9. Right, we are, let's see here, 4, 5, 6, 5, 7. We are $3 away from the 9D EMA. So what's that telling us? If the snapback happens, that's going to be a $3 reversal to the upside, right? So I'm very big with trading with trend, right? But and yes, the trend is bearish, but that doesn't mean I want to put myself in a low probability scenario. Instead, I want to trade what has the highest probability of happening. And once again, the snapback is extremely probable, right? So I got on demand here because I want to show you guys how I would trade this. All right, so we're coming into the critical level. That is the second component of this strategy, right? You gotta have a very extended price from the moving average, but you also need to be coming up to a critical level. The critical level is the previous day close in this scenario, right? So what I'm trying to do here is target a move from end of day all the way back up to previous day high, accumulating and sucking up price, executing the snapback, right? So first thing I'm going to do is check out how price is reacting. Let me speed this up to the critical level, right? So we come down to end of day, right? We're starting to get some buyers showing up, which makes complete sense. It's a critical level. Let's whip out that 2 minute, right? So the way I would trade this here, let's step it forward just a little bit. And you guys can see here I have the 455 calls ready and locked and loaded, right? So the way I'm going to do this here is I'm going to let price do its thing. It's going to generate a trend, right? So now that we've broken above these highs over here at 45554, I most likely would have longed the market on this green candle. Why? Let me get rid of the EMA cloud. Right, I'm going to get rid of the EMA cloud. So right here, you're going to notice this right here is what we call a red bar ignored, right? So if price can come back into this vicinity, right, which it's about to do, I'm going to be looking for a long entry, right? And that's going to be it right there. So we're going to go here, and we're going to do 10 contracts, buy market, send. Okay, so that would be our entry there, right? And now my stop loss, so you can see we got in the market right around 455.50. Now my stop loss is going to be at right below this candle, right? So 455.32, maybe a little bit lower. So once again, I'm using structure here to gauge a perfect, beautiful entry with low risk. That's the most important part, guys. Remember, we're trading against the trend. You want to be very careful anytime you're trading against the trend, right? But once again, we're using the moving average on the larger time frame to identify that gap in price, right? The snapback, right? So that would be our entry there. Our stop loss would be right here. Let me just mark it out so that we could see it. And once again, what we're doing here, the main purpose here is to find a high probability setup, right? So let's just go over what we've already went through. We've identified a very large gap in between price and the moving average. What moving average is that? That's the 9D EMA, right? It's very important. Anytime you get very extended from this moving average, there's a high probability that price is going to return to the moving average, right? So now we've come into end of day and we've identified that there was buying there, right? So now what we've done is waited patiently to identify the red bar that was ignored, right? It's very important to identify the RBI, right? Because the red bar that's ignored, that's going to generate your entry criteria, right? And we're going to give our stop just a little buffer here because this is what we call the fair value gap, and the probability of there being a liquidity grab here is very, very high, right? So there we go. That's our trade, right? We got our stop loss right below it, and now we're going to first target 45610, right? And target up here to that 2 minute 50 EMA. And just notice here, this is so important. Notice how price is reacting to this fair value gap here, right? Or that red bar ignored. See, something happened there, right? There was a bunch of sellers there that got into the market, and then those buyers just completely rejected them, right? So now that price has come back into this area here, we'll call it the fair value gap, right? All of those sellers are now stomping out of their positions, and look at the move it's pushing into price, right? Because think about it. Every time you get the red bar ignored, you're getting sellers that hopped into the market, right? And their positions just got ignored, right? So now notice how when price revisits that area of liquidity, they stomp out of their trade and it starts to fuel the move, targeting the upside. Okay, let's go back to that 1 hour. We still have a pretty large gap in price here, but since we are in that downtrend in this scenario, once again, I'm looking for a high probability setup, right? I'm looking for a move up to 456, right? Yeah, I would love previous day high, and yeah, I would love a full move up to that 9D EMA on the 1 hour, right? But once again, there was a very big rejection at previous day high, and I can't neglect that information, right? So I'm going to treat this trade as is, bumping up my stop, locking in profits when I need to, right? So taking this trade up, let's fast forward a little bit here. That RBI, man, I'm telling you guys right now, it is so beneficial, guys. It helps me so much, right? And it's about to give us a whole nother entry, right? We get another red bar that was completely ignored right here and right here. So at this point is a great spot if you want to add into your position, right? We'll put it by market in, boop. And then what I'm going to do is bump the stop up to this guy. See, guys, you start to identify these red bars ignored, these green bar ignored. You're always going to have a massive edge in the market, right? When I started trading this way, it helped me. It helped me so much with my entries. It helped me so much with when I was in a trade to stay in a trade as well, right? Because if you're getting a nice trend forming, right, over here on the 2-minute time frame, and you're continuously getting red bars showing up and being ignored, that's extremely valuable. Right? That's literally a live graphical presentation telling you that sellers are stepping into the market and they're getting smoked, right? And it really highlights the market structure. And market structure, everybody knows, is my like number one thing, right? Like market structure is the main way I trade. All right, so once again, we're coming up to that 2-minute 50 EMA, probably expecting a little bit of selling. But overall, I want to target this level over here at market structure. And I want to point one thing out before we step forward here. Look at the gap, right? So the gap has gotten smaller, right? It's very important to understand this. We're getting a massive gap here still between the current price and the 9D EMA. Now the 9D EMA is up here. Let's make a little line so that we can really highlight that. Look at that push. Look at that push right there through the 50, right? So this is how you gauge reversals, guys. Ready? Let's do 1 hour 9D EMA. We're gonna make this red, and we'll go with yellow. Very, very nice price here. Very nice push here in the market structure. So you know, you can see we're getting this very nice push. It's exactly what we wanted. Still a very large gap in between price and the 1 hour 9, right? So let's step ahead. All right, so we're coming up onto that first market structure, right? So once again, we've caught a really nice, what is this, 455. Caught almost $1 move here up into the first level of market structure, coming up on our first take profit here. And there's a couple of things I'm noticing here. We are now above the 2-minute 50 EMA, right? And guys, it's basic law of polarity, right? You get that large move down, right? Now you have to go, okay, you know, because I don't always trade reversals. Actually, it's very rare that I do. Right? So when and if I am trading a reversal, it has to have the massive gap in price, right? It has to have the large gap in between price and the 9D EMA, right? Otherwise, there's no, and it has to be bouncing off the critical level, right? Which makes this trade beneficial, and the only reason I even thought about taking it or wanted to use this as an example was the fact that we were reacting to end of day. We had a very large gap up in price, and we filled that gap. Now, there's a lot of liquidity down there at EOD, right? So with the snapback, with the gap in price, now I'm willing to actually trade the reversal, and I will only enter the trade if and when the RBI is present and identified, right? So now look at this very nice push we're getting back up into market structure with our target, first target hit, 32%. All right, we're gonna scale off the top here. Actually, we're gonna leave it, right? If I was actually trading this, I would definitely leave this. Very, very nice move here. Very nice move, right? And once again, we're using the 9D EMA, and we're using the critical level to identify a high probability market imbalance, which is EOD to PDH, right? So, more importantly, guys, I hope you take from this lesson how to use the snapback, right? You can see here we come up into our take profit. The snapback, not only, like I told you, it didn't only help me learn to hold trades longer or to understand when I even should be holding. Like if I'm in a trade, right? I trade SPX a lot, right? So I do not like holding through, low probability trends. How do I identify a low probability trend? How far away are we from the 9D EMA, right? Like if I'm in this short play, I'm holding this until we get very extended from the 9D EMA or I hit my take profit, right? So the 9 will help you hold through trades. It will help you exit bad trades, right? It will help you identify high probability market reversals like we did here using the 1 hour time frame, right? Because once again, anytime you find that large gap in price between price and the 9, there's a high chance the market's going to reverse, right? So I hope you guys really like this content. Once again, this concept really helped me tremendously grow as a trader, right? If you guys like content like this, drop a comment below. Let me know. I find it very, very beneficial for all my clients to use on demand and stuff like this. And I highly recommend it to everybody, right? Happy Labor Day. Guys, hit a like, subscribe, join the team. I'll see you in the next lesson.